All right. So the company I'm going to talk about today is a company we just interviewed last week at the Planet Microcap event in Las Vegas. Tantalus Systems Holding, symbol GRID or GRID on the TSX, trades just over $2, $106 million market cap. But what does Tantalus do? They offer smart grid solutions. They provide a range of smart grid solutions, including intelligent connected devices, communications networks, data management systems, and enterprise applications and analytics, connected devices and infrastructure. That's one area of their business. This segment includes computing modules for devices like meters, sensors, and street lighting, as well as automation equipment and communication infrastructure for industrial IoT network. Another segment, utility software applications and services. This segment offers software licenses, hosting services, software as a service, professional services like project management, deployment, and maintenance. The company is focused on grid modernization. Tantalus solutions are designed to help utilities transform their aging one-way grids into multi-directional grids, making them more resilient and efficient. Supporting utilities, Tantalus has over 300 utilities across North America. You can see here, and the Caribbean with a high customer retention rate. Summarizing here, services are now around 320 utilities. The company has deployed 3.5 million connected devices in its history. 2024 revenues were 44 million US. About 35% of that was software and services, higher margin business. Just over 12 million US in annual recurring revenues and 1.3 million in adjusted EBITDA in the last year. With a capital raise this past year, the company believes it is capitalized to commercialize its next growth phase, and that is this product, the TrueSense Gateway, a multi-purpose device designed for use in existing ANSI meter sockets. It allows, so your existing socket on your house, it allows utilities to modernize their distribution grids by providing a secure communication path, advanced power quality measurements, and support for broadband initiatives, all without requiring a complete replacement of the existing metering infrastructure. Tantalus believes that the company's TrueSense Gateway provides a compelling growth catalyst, 150 million potential revenue opportunity from their advisory committee, 8 to 9 companies that are looking at it right now, 350 million approximate revenue opportunity in its qualified pipeline, 10 billion total addressable market. That's a large market. They would get a slice of that, they hope, over time. 10 to 15% growth rate of Tantalus's existing business. Multiple utilities have now been demoing the TrueSense for nearly 6 months. First commercial TrueSense orders are expected anytime, which would validate the product's business case. But again, until they are signed, it does remain speculative. So let's take a look at the company's historical and annual revenue and gross profit figures. Revenues have fluctuated, but generally over the past 8 years have gone higher. Similar in terms of operational profit and income. We have yet to see an inflection point in terms of revenues, a true inflect up and profitability, but the move higher over the past year, as we can see, is encouraging. And we'll look at those numbers, particularly where we saw growth in Q4. The Q4 numbers, revenues increased 21% to 12.6 million, setting a new milestone for revenue generated in a quarter for the company. Revenue from utility software applications and services increased by 36%, while revenue from connected devices and infrastructure increased 14%. The increase in revenue were a result of adding new utility customers and continuing to expand deployments with existing accounts. Recurring revenue as a percentage of total revenue was constant at 24% of total revenue in the quarter. Gross profit margin increased 100 basis points, 52.4% as a result of increased contributions from the software segment, higher margin there compared to the prior year period. Income for the period was about 1 cent per share. That decreased compared to last year's income of 2.3 million, but that was a recovery on the contingent consideration from an acquisition of a company called, well, it was doing business as Congruitive in the prior year period. Adjusted EBITDA came in at 1.4 million compared to 348,000. So good growth there compared to the prior year. And cash flow was positive for the quarter as well, 3.3 million compared to about 131,000. Let's look at the balance sheet here quickly. 13.2 million in cash after a financing over the last year, debt of about 10.6 million, lease obligations of 2.2. Net cash, if we remove the lease obligations, is about 2.6 million. So the balance sheet is solid. Valuations here, based on actual 2024 EBITDA, trades around 55 times, 26 times expected next year, about 12 times if we take a street consensus there, 2026. The street is split on how fast the profit will inflect and how aggressive that inflection will be. Most are looking at a significant jump in 2026. But again, we caution the orders still have to come in. Conclusion, Tantalus is an interesting company. We like the space, having profited tremendously from our last electrification recommendation, which was Hammond Power. The difference at this stage in relation to Hammond Power, when we bought Hammond, we were able to buy it at about 6 to 8 times EPS with growth, a growing dividend, and no speculation on market acceptance or not to power its growth. We do see a path for TrueSense to add significant growth to Tantalus's business, but there remains risk, obviously. The trailing valuations remain high, but the company certainly has the potential to grow into them. We're monitoring the company at present as it doesn't make our criteria in terms of consistent profitability. We saw profitability in the last quarter, which is a great sign. Company reports its first quarter earnings on May 7th. We'll be on the call and we'll look for management, their indications of where the future of the company goes and how that quarter comes out. We expect that to be a softer quarter compared to Q4. And at this point, no positions in the company, but we're monitoring it closely. We like the business.
Yeah. I think it's like a sexy space to potentially partake, but again, it is like a little early. And when we spoke with Peter, he was indicating that, the qualified pipeline, they had about 9 utilities that have helped them, build the TrueSense. And then there's about a second bucket of like 35 utilities that they'd like to tap into. And, he was saying that when they issued their 2024 results in March of 2025, they had about 28 utilities, which had like started pilot projects with them or project trials. So, it is interesting to see where they go. Obviously, they want to grow that. When we spoke with Peter, he was, basically saying that if they could offer the TrueSense for free and just get it out in the field,
yeah,
they
that was
would.
my suggestion because you get
Yes.
a ton of recurring software, high margin
Exactly.
revenue off that. It
And so
is
what
funny
was his-
because
Did he have
sorry.
rationale for not doing that?
Well, I mean, it is a significant cost to get it. I mean, they have competition too, but now there is some disruptors coming in, but they're using NVIDIA chips, and the chips themselves cost more than Tantalus's device, basically, as we understand. So the cost plus the devices, some of the disruptors. I mean, they're a disruptor to agree as well, to a degree for sure in this space, but some trying to build even more advanced tech than them. The cost on them now is so prohibitively high that, I mean, they've been dealing with utilities for years, and getting approval for budgets is difficult at the best of times. When you're talking about, factors, huge factors of the cost that they are going to charge their device for, plus the devices, like the disruptors of their own technologies, devices, they're overbuilt. Like they can't even see use cases for what the additional power in these devices, computing power, would actually do. So I mean, again, it's in their interest to do that, but I've seen some independent third parties also say the same thing. So I mean, it is interesting.
Very.
We need modernization of the grid. We believe that. It's one of the reasons why we were involved with Hammond Power. I mean, I at the event I said, Hammond Power has gotten into the power conditioning. There is software for power conditioning. I said maybe Hammond will look at you. I mean, again, I'm kidding in terms of putting those two together right now, but Hammond certainly has the free cash flow to bite off $100 million. I don't think they'd want to sell at their $100 million market cap. You need a significant premium, significant. But again, it's an interesting company. They're still they need to get through the testing phase, get those products out there, sell that service, and get the recurring revenue coming in from that. It may happen. If you're an investor who likes to speculate that, believes in the technology, maybe there's a case to be made.
Yeah.
We like, just like when we have illustrated our case for orphan stocks, give us some proof in terms of those results. There may be more eyes on this company, so maybe when we see proof, the stock is already too high on a valuation basis. But there's often times where you get proof, there's a general market decline, and we may get a chance to buy a company like this. And we did that with a company called VitalHub, which was profitable, was proving out, getting more and more profitable, and then traded at like an all-time low in terms of valuations in a weaker market. And we were able to buy that right, at its inflection point. And we actually had the proof already there in the numbers that they could be significantly cash flow positive. For all the companies you may miss because you don't get in early enough to have the consistent profitability. Again, we cite, and we've cited this so many times now, it's 90% of companies are already profitable that go up 10x in the microcap sector, small profitable companies. So, you might miss the 1 out of 10, but you're baking in a little bit more safety, and you need to have safety. It's about sometimes not losing money.
Yep.
That it is about, if you go after every story, you're not going to have a solid portfolio. You need story with underlying numbers. That's what you're looking for. They can be unicorns, but you can find them.